Hi everyone, Jose from FOREX speaking. Thank you for watching this video. Today I'll be going through just a couple of days of the NASDAQ and FDAX. I'm going to make this video very short. Just want to show you what your opportunities are in the market, especially when you want to trade. So this time I'll also be using a calculator to tell you, assuming that you are trading our system and showing our real life basically the chart that you're going to be able to see once you join TradeSimple, and how much you have the potential of making if you follow the rules. So as you know, we trade between 8 a.m. and 12 p.m. and our very first trade as a result was a little after 8 a.m. at 8:48. And this trade came in and with an entry of 73.12.5 and an exit of 73.10.5 right here. Okay, and you're exiting after 8 ticks, and that's all you need. Your stop loss, initial stop loss, as soon as you get in at 73.12.5, your initial stop loss is 1 tick above the tail of this candle, which in this case is 73.16.75. Sorry, 16.5. And as soon as you move, based on our ATM strategy, as soon as you move 3 ticks in your favor within the trade, you start bleeding out your risk. Now, our first recommendation after 3 ticks is you put your stop loss 1 tick above this square box right here. Okay, so in this case it would be 73.14.75, and as soon as it moves 1 whole point at 4 ticks, you move this to 1 tick above this box. So now you've bled out your risk in just 3 tick, 4 tick profit of 1 tick. So now you have 1 point risk. So you have a 2-to-1 risk reward ratio. And once you hit that 8 ticks right here, you're out. You have 8 ticks. So what happens with 8 ticks? Let's say you have a $1,500 account. You're able to trade, and with our recommendation, you should be trading just 1 contract of the NASDAQ if you have $1,500 in your account. However, you're able to trade up to 3 contracts with the NASDAQ. Let's just say you're trading 2 contracts. That's 2 times 8 multiplied by 5. Okay, so that's $80 USD with that 1 move. All right, now I'm going to show you how many moves happen in the day, how many qualified moves happen in the day for you to basically take home however much you want, and that's just 2 contracts. All right, so this is a clarity diamond trade. Now, the clarity diamond trade happens when, number 1, the tail of the white candle hits one of these major EMAs, the solid one or this dashed one, and the clarity diamond indicator pops up. Now, this indicator occurs real time. It does not repaint. As soon as conditions are met, you have an indicator right here. And once that happens, you want to enter at 73.11 with a quick target of 73.09, and there's another 8 ticks. Okay, it didn't even touch or go close to your stop loss. All right, that's 2 trades. So we'll just multiply this by 2. Okay. And then your next trade doesn't occur until another swing point is broken. All right, with of course our conditions. When a swing point is broken, in this particular case, it was broken right here. So when the price went up, this broke and it went up. Now, some people may ask, especially new people that haven't been watching my videos, why is this clarity diamond not qualified? We don't take every single diamond. All right, we only take ones that are hitting one of the major EMAs. All right, so once this breaks, you're hitting this pivot right here. So it enters here at 73.06.5 and you exit at 73.08.5 right here. All right, and your stop loss is safe. It doesn't trigger stop loss or even come close, and that's your 3rd profitable day trade of the day. Okay, so actually, sorry. All right, now where's your next trade? So let's look here. Now this is an 89 EMA bounce. Okay, now the 89 EMA bounce is basically when it's going in the direction of the trend and it has the color, so red is for down, blue is for up, then it touches your tail on your 89 EMA, you enter 73.11 and 13. Now, you necessarily, with our TradeSimple rules, you aren't trading all 4 of these. Okay, you want to trade just 1 successful trade per day and call it a day. All right, so that's another 80. Where is our next trade? Right here. So break of the EMA, Okay, now why didn't this break of swing qualify for trade? Well, number one, once it does the first break, you only want to take the first break, the first retracement break back up. All right, not the subsequent ones. Why don't you take subsequent ones? Because your trend could be exhausted. All right, so what we're looking for is for it to recharge. And what is a recharge? A recharge is when it goes back to an EMA. In this case, it came back close to this EMA, but this is considered a recharge. Once it comes back, you're waiting for a next break. And in this case, it broke right here again. And once that happens, you take a trade at 73.20, at 22, you're out. Okay, no losers. It's $400, just one contract. All right. Now a lot of people are stingy. They are not stingy, but maybe greedy, and they want to make as much money as possible, as fast as possible. Now, folks, start off with just 2 contracts. All right. Don't have to go crazy and start off with anything major. Just start off slowly, and you'll get there. All right. Just like I did many times. All right. So now, no trades here because it doesn't go to any major EMA, but it recharges when it gets to this EMA. And when it breaks, you're waiting for the retrace, you get in at 73.45.5 and you get out at 47.5 and you're good to go. Now, yes, there is slippage sometimes. What happens if instead of 73.45.5 you get in at 73.46? Well, see, it's simple. You keep your profit target the same. So in this case, you don't get as much profit. All right. So let's just say you got in at 73.46. Your profit target should stay as if you got in at 73.45.5. All right, it should not move. So you're not going to make as much profit, but it eliminates your risk. That is what's important here. All right, so no trades here. Let's keep going. What happens? Nothing pretty much happens. Okay. Now some would consider this a recharge. I personally would not take this, and it's a break of a range, but I personally wouldn't take this because I'm looking at a really long trend that has occurred in the market, and I'm fully expecting this to go back to this dashed line. All right, now if you go into our master courses, you'll learn about why the EMAs are very important and how they work. All right, so now you're way past when you should be trading, so let's just skip the rest of this and go back to the 18th, which is Wednesday. All right, so where is your first trade? All right, so your first trade happens right here after the break of this swing point. When that happens, you get in at 74.24.25 and you're out at 26.25. And that's it, you're done for the day. Based on our rules, you're done for the day. All right, and now the next trade comes when you break this and you retrace. So remember, when you break something, this is called the retrace. Break, retrace. All right. Break, retrace. All right. It happens in the market every single day. All right. So here's another winning trade, and here is a classic example of a clarity diamond with the tail sticking out and hitting the dash line, and there you go, another trade. Now this breaks the swing, so you can take a trade here. And then nothing is happening, no trades here. So this is a trade right here I missed, is this break of this support. Now it doesn't have to necessarily go on support. Now more advanced traders are going to be able to see where support and resistance is. For the beginner traders, just use the swing points as support and resistance for breaks. But for more advanced traders, you can use the consolidation. This is considered temporary consolidation. Even when you see 2 white bars like this, that's technically saying the price went down, went up, and it went back down again. All right, so when that happens, when it bounces off a certain point, that's considered support. Temporary in nature, but it's still considered support. You can take a retrace off. So when this happens, the price went down, look for the retrace. It happened nicely over an EMA, and boom, down. Okay, so this is happening over and over in the market. There's plenty of opportunities for you. If you are interested in joining TradeSimple, then just go to our website at tradingsimple.ca or tradesimpleofficial.com and sign up with us. You can start for free. You can learn the basics of trading and how we trade it. Now, we've aggregated courses and knowledge from years and years of training and trading live, and we've basically put it into a package for everybody to use. for their benefit and created many other strategies. Now our site currently is under maintenance, but we should be online by the end of tonight. So if anybody's interested, check it out, TradeSimpleOfficial.com. I'll write it down right here, www.TradeSimpleOfficial.com or www.tradingsimple.ca. Go to that site, sign up with us, and join us. This is a revolutionary new program, and I'm very excited to see what everybody can accomplish with this. And as you can see, we're very transparent. We look through the chart so you know what you're getting with just this one strategy. When the site is up, I'll show you the website and show you all the other strategies that we have and how you can get your hands on it. Thank you very much for watching. Have yourself a great day.